Hey, what's going on, guys? It's your boy MC Fire coming at you again with another video. We're blasting away with this week coming in strong with some real data. So, for anybody who's keeping track of our zero DTE trades, we actually tallied up the numbers for respectively the last 3 months. We had taken over 33 trades over a 3 month period, and profit wise isn't not necessarily what we were looking for. Overall, it went down 185. So we're looking to remedy that. We know that the potential for butterflies is actually relatively pretty good. So one trade could erase that essentially, but we definitely want something a little bit more consistent. So that's the data as it stands right now. This week, though, we're gonna do a market recap of some of the trades we took and what we think the market will do moving forward. So let's dive right in. All right, so out the gate we have a chart of Meta. We're kind of gonna just go down the list here for what we typically trade. This is our pretty standard watch list of things that we're watching and trading. It's a lot of well-known names like Meta, Apple, Lilly, Palantir, so on and so forth. There's also some other things we like to watch, like some forex pairs, as well as 20-year bond and the 7-year bond. But yeah, there's a lot of juicy names in here, so we'll get right to it. But before we do that, though, we want to show you guys some of the really cool setups we have on the TradingView side of the house, right? So we did set up our we are gonna start using the trend the auto trend system to use it to help us get funded, right? Its job is to kind of take the guesswork out of trading and to kind of make it simpler for us to execute, trades, get in, get out, have a nice risk profile. It's not necessarily something we'll use in a professional setting, but just to have a nice, well-to-do system that we can like follow alerts while we're trying to get out of our job. This is a system we'll use until we can have a more defined approach as regards to using professional tools, how to use them, and set that up to where we could sit at the sit and watch the charts every day like those professionals. So what I'm basically saying is, by no means this is financial advice. This is just us making sure you guys are tracking what we're doing in our learning. And if you guys find value in learning, yeah, please continue to watch the channel. And I would say definitely necessarily read books. We've read quite a few books, and we're still learning and we're still growing. So as we found when we did our breakdown of the zero DTE, we have a long way to go. Even though it's a phenomenal setup, maybe there's some things that we missed. So out the gate, we'll open this up so you guys can see it. What the auto trend system is it's very simple. You buy on blue, and then you get a double blue. You take that. There are some rules, but the risk to rewards are pretty much defined for you. So let's say, for example, we have a ticker with USO. Let's say you got a buy trigger here. You'd come in for a long, let's say on the break of the high of this candle, right? Your stop out would be the last pivot low. And let's say you wanted to set this trade up to go necessarily 2 to 1. That's kind of where I do it. So 2 to 1 actually goes and gets stopped out almost immediately. So that's one thing that I noticed with the system is it gets you and lets you know very quickly, hey, your the previous pivot, if it breaks that, you can expect there to, that's your stop loss, right? You call it quits right there. If you're wrong, you're wrong. So I kind of like that because it doesn't allow you to back hold or to think you're smarter than the market or even smarter than the system. Can you follow? Really, these are training wheels. Can you follow simple rules? So that's kind of what it is in a short. So really, what we'll really be taking trades on is something like Qualcomm, right? And we showed you guys some of those videos. If you watch some of our previous videos on Qualcomm, some of those were definitely profitable for sure to the upside for Qualcomm. The reason why we have these other tabs up here really for XLK and the SPY is we noticed that if your ETF is pushing, then Qualcomm that's inside of this ETF is more likely to have a confirmed signal. So if both are pushing in tandem, it's more likely that you won't get faked out. It's just something for peace of mind for me. I still will be taking those trades, but like let's say for example, if you're in this zone and this chopping around and you're not getting any confirmation on the XLK, well then I probably wouldn't take probably wouldn't take that trade. But there was one for Qualcomm here. Let me zoom out, do this and do this. There was one for this system. Yeah, here it is, where we took the trade and it absolutely made a monster return. Well, the difference was Qualcomm and the XLK actually fired in tandem. So this was a time when the Qs and XLK all kind of moved together, and Qualcomm gave us a nice, very, very nice, juicy 4-to-1 return as opposed to risk. And we actually held it overnight because it actually ran so far, got the overnight premium, and then sold at the open. So really good trade for us there. Let's see here. Yeah, boom, Candace. Okay, so and then something else we did. I want to show you guys this because I thought this was really cool. I'm going to be watching this. We're not necessarily going to take trades or take triggers off of this, but I definitely liked. There's a gentleman I recently watched his video. So in some of our trainings, we learned about relative volume and trapping traders and what's it called when it's unbalanced. It's not unbalanced volume, but it's God, I can't think of the word right now. But basically, absorption, right? Absorption and trapping traders, right? So what we learned about absorption, I wanted a very simple, fun way to be able to find, hey, is there absorption happening? Is there trap traders happening? That's really that and when you have divergence. Those three plays really, from what I've seen, are the most profitable, but also the hardest to find. And then we actually found a simple indicator on this TradingView chart that kind of gives you relative volume. So what it does is it plots out for you via green and red relative volume. So if you have higher than normal volume relative to what it normally is, it will print that red, right? And if you have higher than normal volume on the green side, it'll print it green. Why do I think that's important? I think it's important because let's say, for example, right here, if you have this selling candle coming in towards the end of this move, right? If this candle, which we set it to 1.3 to generate the lightest color setting, that means that volume would have to be 30% higher than normal. So if let's say 30% of the people that would over the normal amount of volume are people that are getting in due to FOMO at the end of this move. If they become off sides, this could spur on a massive amounts of buying. And you kind of see that here. These candles kind of have follow through, right? You see these 1, 2, 3, 4 reds, right? These 4 reds, they all have follow through. This 5th one here doesn't have any follow through. So it does print a red, but then quickly it gets off sides. That would be indication for us to say, hey, let's do what the other people have done and catch them off sides, at least to pivot high. So let's say, for example, the way it was explained is if, let's say, for example, you take that long at the break of the high, here you go, here's your stop at pivot low, and you would just trade it to pivot high, right? 2.78, which it does actually hit. No problem. You just have to hold it for about 3 weeks. I just thought that was really nifty, and it's a good way to find trapped traders in the market. So coming into here, and this is on a day chart, coming into here, let's say this day candle is at the top of this range. If there is potentially a break below where, again, it's at 1.3, so 30% higher than normal volume. If it breaks below that, we could potentially see a trade down to this level, or even just registering at the top of here. Where would your stop loss be? Obviously, break of highs or pivot highs. So We're going to watch that to see how effective that is. And we'll probably put on some like phantom trades for a little bit to see if that actually is something that, from what we've learned, is something that gives us an edge. We're always looking for an edge as traders. The market's adapting. We have to adapt. So what worked yesterday might not work, but the fundamentals in understanding that you're trading against market psychology is a good thing. So if we trade against market psychology and we understand that certain traders, they're going to get trapped, as opposed to just thinking that the market's just moving in, buying and selling, or it's bouncing off invisible levels. I think that gives us a higher edge of knowing that, hey, there's somebody on the other end of that trade. What are they thinking about? And if there's a lot of people on the other end of that trade and we can see that, we can trade with confidence in doing what other people aren't doing. That's one of the ways we gain alpha in the market. So there is that. So back to, I guess, what we wanted to talk about today, which is what the market's going to be doing for this week. Kind of went over Meta, Apple. Again, we really like to take swing trades for our portfolio, not necessarily day trades. We are practicing day trading with the auto trend system to get funded. But in our actual account, we want to actually put on trades that we know, and we have a edge that's work from some of our mentors. Apple's kind of in the stratosphere here, so not necessarily looking to take any reversion to the mean trades as of yet. But seeing that the Qs in Apple have pushed up pretty heavy is a good thing, right? We like that. Lily also in the stratosphere. But if these bad boys pull back, what I would recommend for you guys to do is, if you think, let's say for example, that you are in a trade from Lily at this point, right? Stay in the uptrend, but then put a hedge. If you feel like, hey, this thing could break below the low of this candle, well, hedge it out. Keep the up play, keep the play from back here, but hedge in a new play, maybe for next 3 weeks to a month, to in case it returns back to here. So that way you'll keep your up play, as well as you'll take profits on the downside to kind of offset that. Then that comes from our mentor, who says, hey, you want to stay in uptrends as long as possible. And I do concur. It does have benefits psychologically. For one, it's less things you have to worry about. Number two, you don't have to think, would I, shoulda, coulda, stayed in a trade. Again, your psychology is just as important as trying to predict the market psychology. So less things you have to worry about, in a good plan of action. You'll be right most of the time if you apply by those rules. And so we have Palantir here now. We averaged in to some Palantir at this level. And as you can see, it did take off, almost completing its rotation. It is still continuing in its uptrend, going from what seemed to be a somewhat going into a weaker trend to continue that trend to the upside. But that is pretty concerning that Palantir has had this pretty monster drop from 2661. That could be a litany of things. That could be news. That could be bad earnings. We just don't know. So if Palantir doesn't bounce, I guess, this week, doesn't necessarily mean that it's an indication for us to get out. You got to think that the fundamentals say that the low is here, right? But it does mean that there might be something going on that we need to be aware of, right? There could be an opportunity to buy here, but right now the structure hasn't changed. It's still in a relative uptrend. The 21 period moving average is moving up. Your expansion contraction is green. Your unbalanced volume is green. And right now price action is above the 21. So no need to necessarily exit or get freaked out because of this candle. That could change though. For the Qs, again, another thing that we want to take a note of here is the Qs did hit 3 ATR on the weekly, right? So yes, that is somewhere where you could say, I would like to hedge, but again, you don't want to catch a falling knife, so to speak, in the other direction, right? You don't want to be that guy that, okay, if I put on a hedge at 3 ATR, I'm constantly taking it off. If you do have your uptrend play, keep your uptrend play, put on a hedge, and set the parameters for your hedge. If it breaks high, you let it go. Because the way the mentor said it is, you will be a genius either way. If you buy here and you keep the uptrend and it keeps going, great. You kept your up play. It's in an uptrend. You look like a hero. If you sold the top, great. You sold the top, but you didn't get rid of your bullish play in case it continues and you're wrong. So if you sell the top, you're right, and if you keep if you keep your bullish play, you're right. And I really like that. It takes a lot of unks on having to decide. You just put on both. XCOM. So XCOM or ExxonMobil is ExxonMobil is in this very, very wide rotation. It's been in this rotation for a hot minute, right? So it's basically been in this rotation for like the last 2 years, since 2023 at least. So if it's going into the middle of 2024, right, I would expect it to maintain this kind of rotational pattern. So what does that mean for you as a trader? That means for you as a trader, narrow this down on a smaller time frame. Take the smaller time frame triggers potentially to complete the rotation if you believe it's going to do that. We can look at some of that. But as you can see here, you want to short the rips. So if this is on a date, if this is on a weekly chart, hammer it down to the daily chart, and you can see it pretty straightforward. Does look like it's wanting to complete its rotation to the downside. Its daily 21 period moving average is moving down. You've got a death cross here with the 8 being below the 21 period moving average and price being below them both, right? Your whole moving average is moving down. Unbalanced volume on the daily chart is also red. The trend has been consistently down. Everything here says that the trend will continue, and the trend is your friend until it's not. So, especially when it rallied up here and you saw a break of that candle, this definitely would have been a very, very juicy trigger to go ahead and execute a trade to the downside, right? Hindsight is 2020, but what do I think moving forward? If you're hammering it down on a smaller time frame or even an intraday time frame, let's say we take the 10-minute, this is kind of what you're looking for. You see this nice rip. Well, if you know it's an extended downtrend, what do we like to do? Short the rips. So at this point, there's no reason why on any time frame that you should be in this trade of XOM at all, right? This trade is basically screaming at you from a weekly, a daily chart, and now an intraday to get out of this trade. You have a double red everywhere, and then it does end up following through to the downside pretty significantly, actually off of the break of this rotation. I could draw that out for you. So once it breaks this rotation here, and you're like, man, this thing is really going to take off. If you're still in the uptrend, that's on you. It's pretty straightforward that you should be looking for a downside plays. But once it breaks that, there's nothing really there for you. So, and that's XCOM. USO, what will we be looking? Same thing for oil. And this is USO. Let's go to we're going to jump to the weekly here for you guys. USO as opposed to XCOM. So this is US oil, right? Kind of the same pattern, just flipped. It's very weird to say, but if you look back to, I guess, August of 2020, let's see, it looks, August of 2023, it starts its rotation up into that into kind of the same way that ExxonMobil was. But if you notice here, it's already kind of completed that rotation down, and then 2 weeks later, it's on an uptrend. So if you notice that the 21 period moving average is up, you've got a golden cross here, unbalanced volumes green, expansion contractions green. We get all these confluences saying it's green. On the weekly chart, I would look for that continuation to happen even on the daily. Now, you've broken out of this rotational zone, and if it continues, it could complete that rotational zone. Something I'd be concerned about is it being at 3 ATR, but remember, The trend is your friend until it's not. So on your flex grid, this is something that I would be looking for, potentially even a buy trigger on here to take to the upside. Now we do have, and I'll show you guys this, we do have USO actually on our like in our system. So we're watching USO. We have alerts on USO. The 45-minute auto trend system is blue, which means that's bullish, right? From what we were saying, we know the weekly, the daily, and the 45-minute trend now confirmed here is bullish. So if we get a trigger to buy, we take that trigger trade. Here we got that trigger, but no follow through, right? We also have the confluence of these. I want to kind of see how this RVol works down here. This relative volume works down here as well in confluence with the auto trend system. Is there an edge there, right? So as you can see, like right here, we've got a giant red candle right here, which means larger than normal volume on the 2-minute chart has stepped in on this candle. So if you see a break above that, you can move with confidence, with size if you need to. But here on this candle, right, there's red, relative green here, doesn't really break above. As it moves up against it, remember, this candle's sitting right here. So sellers probably also came in, stepped in, and defended their positions. It just is represented here with this change of trend here. Like you're buying into resistance. Yes, it is a spot where you're like, hey, this is probably a good place to buy, but there's got to be people behind it. So it's not going to make for us. This isn't going to be a trigger or not. It's just for us to watch it to see if there is actually an edge. We have to learn if there's an edge. So just USO is on our other chart there, so that we're watching that for sure. Now, Big Boy Spy, right? Big Boy Spy has been relatively choppy as of Friday, and then kind of sold off Thursday. So really, the big sell off was Thursday into a choppy Friday. And why did we have that choppy Friday? You notice right into smack dab into a weekly resistance level, and we can take a peek at that. So right here, after the gap, it basically made that high, and I kind of set that high there as why, if you have this big gap, is a resistance there. I think that's a pretty pertinent psychological level that the market came to this consistent consensus in Never Never Land that this is going to be a new high. So after you see a giant gap like that in any kind of pullback, I make that a level because all of this buying, and then the market decided that, hey, this is where we want to stop, and then it traded for 3 days in that direction. Choppy, didn't break that until it finally broke in a big way. So that's just something to think about. When you see it on here, you almost need the daily chart to actually confirm that weekly buying, and it's actually right here, right? Because the next week it broke in a big way. So we'll go ahead and at our new high on that week, we'll go ahead and put this here, and we'll change it to red, so that our, if we're looking on an intraday chart, we know, oh, this is the high. This is high, right? So I'll be just so we can keep that in mind. So Bitcoin ETF, Bitcoin's kind of been getting hammered. And when I say hammered, it hasn't really gone anywhere new. It has pulled back to this region before, sometime April 29th-ish time frame. So in April, it did pull back. And so if it pulls back here, it could be, just within a range until you get another major push. Being up to as high as 65, 61 for an asset that it really people really haven't found its use yet is not anything to scoff at, right? People have found good usage for Bitcoin in going between borders and transporting wealth, saving your purchasing power. Arguments for Bitcoin are it has had it has outperformed almost all other assets So yes, there is cases for Bitcoin. So I don't think it's going anywhere necessarily soon, but we'd have to just wait and see. So I'm bullish on Bitcoin. I think it only gains prominence as central banks they continue their financial policies as regards to printing money to get out of disasters. I think that more and more people will find Bitcoin as a viable option to store and transport a lot of their wealth, as well as preserve some of their purchasing power. So I am still bullish from a fundamental standpoint, but we'll see if the technicals confirm that. I would be looking for necessarily a break of 53.34 for, like, let's say if you were looking for puts 53.34, and then potentially for buys I would definitely look for a break above the daily level of 59.26 for buys. Have to get above that before I would look for buys, and it would probably just complete the rotation at 64.44. Okay. AMD. So AMD is pretty sweet. It is a chip maker. It kind of rides in the same area with Nvidia, but it doesn't have necessarily the prominence as Nvidia, because Nvidia uses a lot of AI, and they're really taking off, man. As a company, let's see if we can tap into Nvidia real quick. So if you look at the charts comparable, they're in the same fields, but Nvidia is the golden boy, basically, market wide, globally wide golden boy, right? It recently did a stock split, a 10-1, and it even hit as highs as 140, but it has since pulled back. Now, remember what I told you guys, we're looking for a leap trade in Nvidia for the year. Going up to 140 is really amazing, but what's crazy is it was at 122 when we wanted to go ahead and make that leap. We wanted it to pull back though, so it's not so extended in the 3 ATR range. We didn't want to take an Nvidia trade in the stratosphere, so even looking on the daily here, it's just been a slow grind higher. And then once it hit 140, massive pullback. It actually gapped into 140 and then pulled back and then gapped below that. So the 21 period moving average is still pushing up. And, we have this mark if it crosses below 118.61. Just kind of keep that in mind. We really want it to, I know it's going to sound bad, but we kind of wanted to get down to this 98.78 level before we take action on the leap. That's not a trigger to get in. It's just literally a trigger to say, hey, heads up, you need to be watching this like a hawk, and potentially if it starts giving you a trigger to the upside, take that bad boy. So we'll be looking for any excuse to get a leap into Nvidia for the year. But yeah, AMD in the same sector, but not necessarily looking to trade that until we see some either major catalyst news. Because I mean, look at this price action; it's basically been choppy, so there's no trend on it, and we like things that go in one direction. XLE, XLE is kind of in the same boat as XOM. It has been kind of on a slump, trading down. We'll hit to the weekly. So it's kind of been in a steady decline. It actually retested the 21, and it actually retested the 21, failed one time, and then now it's back up to where it's testing that weekly resistance at 90.05. So what would I do here? I would wait for the trend change, right? Not necessarily looking to take XLE. I would want to get on the right side of the V to the upside. I wouldn't want to necessarily take this to the downside because it hasn't really told me specifically what it wants to do as of yet. It's in a downtrend, but we don't get any death crosses, retests, none of that. So if you were going to take a trigger, it would be literally in the worst spot to take that trigger, right? You could take the trigger here, right, on the 8 period moving average. It'd be below the 8. But again, you're in a strong uptrend. So why would you want to take that sell trigger right there? So I would just be patient and wait. That's not our swing. We'll be patient and wait for XLE to give us a buy trigger, or actually give us a change in trend where it turns down the 21 period moving average and we're looking for an actual sell trigger. Light sweet crude, not too much happening here. It's kind of chopping around. All right, so 5-year treasury notes. If you notice, right, 5-year treasury notes are definitely they've definitely tanked, right? Hitting lows of 103 and currently at like 106. So what does this mean for treasury? I believe until you get a major catalyst, I don't see fundamentally treasury notes necessarily being bought up in a substantial way. Actually, this dumping has been kind of on the world stage, people becoming less interested in U.S. treasuries. Even with the high interest yield, it does drive the cost down. So because of that, until the interest rates change, don't look for a major change in the treasuries. That also goes for the 2-year treasury note. Same thing, no real change there. It's literally the same thing. So you have the British pound. The British pound, in retrospect, if I was going to take a trade on the British pound, because it is in this choppy state, let's say it gets down here, you get a buy trigger. I would sell for premium. That's kind of what I would do. I'm not trying to actually take a trade here, but if it gets down into this 1.2121 level, 1.2.1 level, I would definitely want to sell for premium. Same thing if it gets into the highs of 1.3, I would definitely want to sell for premium there, because if it gets up there and you execute a trade, as time moves, it's shown that it likes to chop around. So that would be the only trade I would be looking to take because of stuff like this, right? You have like 3 weeks of it just milling around right here. And so when it actually does break, you want that time decay, that sideways movement to be working in your favor and not really against you in the trade. So there's that. Aussie dollar, very similar. Actually, most of the Forex pairs are milling around, chopping around. So the setup would be the same. Obviously, you would be looking to let it go, break of low or break of high, for sure. So sorry about that. Euro, no different. We actually did that same play on the Canadian dollar. Kind of went really deep. This rotational zone has been bounced in 1, 2, 3, 4, and kind of got down there 5 times. So we went on and took the play. It is currently like open up like 107. So not 107, 170, excuse me, for the P&L. So actually been a pretty good trade, and you look, it didn't have to even go that far. It's basically just returned back to its 8-period moving average, and it's been moving relatively in this choppy zone for 3 weeks, right? It has pushed away from our entry because we got it like relatively deep, but once we saw it come down and start pushing up a little bit, we can actually pull that up on the daily here. Chop. We'll go to the 10-minute here, go back. So once we saw the major death cross, obviously there's a lot of selling happening here, and then you get a nice juicy buy. We'll actually open this up for you guys so you can see that. You do get a double golden cross, and as it bounced, the better buy would have been right here, but we took it when it actually hit the alert of break of high here. We took that, and the next day absolutely exploded to the upside, giving us some nice juicy premium. Pulled back a little bit, and then has since been kind of just milling around in this area close to the line. So as long as the trade's above and slightly gradually up, we will continue to gain premium, and we'll continue to gain profits for that. So getting that as a kind of a reversion to the mean trade. As you can see, it's just kind of death cross, golden cross over here. Death cross, golden cross, just kind of milling around, but it doesn't necessarily it doesn't necessarily pop down here or hang out down here. It just mills around towards its moving average. And if we really crank up and rotate towards the upper levels, we could definitely see that premium grow for sure. Unless, of course, fundamentals change, right? And what would really be the benefit was interest rate cuts, and then you see a surge in these forex pairs. That's what I would anticipate. But until that happens, like the Japan, now this is the only one that I don't think that would happen for. I think that from what we've been seeing from coming out of Japan, they, on the other hand, have decided to not do what the other central banks are doing. They've decided to just continue their monetary policy, and it has absolutely just driven the yen compared to the dollar in a very dominant direction in one direction. So for the yen, taking actual sell triggers actually would be applicable for the yen. That's the only pair that I would consider that on, because they're not in a choppy range. They have said hey, we're going to continue our monetary policy as the way it's going. And because of that, because they've stated that and the trend confirms it, they're the only ones that I would not sell premium on, unless it's obviously a put premium. We can forego TLT. BA. So big Boeing. Yeah, Boeing has been hit. It's in the news for a lot. I think they had a Senate hearing. It crossed my feed. Didn't watch it, but I pretty much knew it was probably due to quality assurance. So if you're a big Boeing advocate, or if you're in the defense sector, I would say, yeah, man, bad news is a good time to buy. That doesn't necessarily mean just like reckless buying, but let's say, for example, Boeing gets a nice golden cross and unbalanced volume, and the trend starts changing. I would definitely look to take a buy in a Boeing. What you would want to see is it's kind of something like this. Your trend change. Here's your buy trigger back here, but that independently, your trend does change, and you get a nice juicy buy trigger right here. So after this pretty defined Harambe pattern, I would feel very comfortable taking this. Very comfortable. If you get a very nice Harambe pattern like this, morning star pattern right here, like to call it, I would feel very comfortable taking that. And then you see the market did like respond in kind, and then you get another morning star here, and it responds in kind. So somewhat a morning star here, but no follow through. Again, bad news is a good time to buy. So if you're looking to be a long-term holder, as we are looking potentially to do, Boeing, we're watching that puppy like a hawk. We've got alerts down here where we feel like the risk, it still warrants, but we want to know, hey, if you break this level, let me know. If you get down as low as here, definitely let me know. For sure. We want to. So TJX is not a company that gets necessarily a lot of prominence in the news. It's really kind of taken by NVIDIA, but this company has absolutely done wonders from a fundamentals and technical standpoint. It's right up here in the 3 ATR territory currently, and where it hit the 3 ATR, it kind of reacts off of that and comes back down to some normalcy. So if you do get an opportunity and you start seeing some patterns, like right now you see 1, 2, 3 days of just this kind of choppy back and forth, respecting this upper range. Let's say, for example, you see a break, a major break below here. I would say, okay, if you want to be a genius, you can set a hedge on, but I wouldn't hold it past break of high, right? That would be your potential to get out. So it's in this range. Breaks here, maybe retest. That could be your potential trigger to take that trade, right? So yeah, and maybe you hold it until it completes its rotation to the downside, or it breaks to the upside. Nucor, absolutely been thrashed. So I don't know what happened with Nucor. We between me and Q had gotten one of our absolute best trades of the year on Nakor, like hands down best trade, hands down most profitable trade. This is right around the time we got our mentor, and if you look at this trade here, the trigger happened as it pulled back. I felt comfortable getting into it, knowing, okay, I know what my risk to reward is. I think like the next couple of days, it just kind of milled around for that week, and then it took off. Like it was like the last day of the contract, it took off. We rolled it sideways and up. It just kept paying us right through this whole move, and then we ended up closing it right here. 1, 2, 3, 1 week roll, and then we just closed it. I couldn't take it anymore. I was like, man, we're just getting so much profit. This is insane. Biggest move that I've taken. So this is like 149, and then it catapulted in a short span to like 170. Yeah, oh, in the core and Lily. So in the same time period, we got absolutely paid around the same time. Yeah, Lily was another one. So it absolutely this one right here at 451, and then it took off to 518. And like you can imagine, like you look up and you're like, yo, this is not my account. I don't know, we got hacked or something, like maybe this and you're like, oh no, it is my account. And one of these plays just absolutely broke to the upside off of earnings, and it crushed numbers. It did really good. So it's just one of those things that you can every trader has his day. In the core, and Lily will forever be cemented in my heart personally as one of the absolute best trades. I mean, we made like easily 10,000, I think $14,000 on Lily alone. It was insane. So if we're gonna keep pushing Novo Nordisk, Novo is in our happily is another one of those that we took and we rolled it several times. So Novo here, it is one of the makers of the weight loss drug that everyone loves. So I only see demand for that going up, especially here in the West, as people are looking to get their fitness needs met and their weight loss needs met. That's a big thing here in the States. But yeah, we took a play on it back here as it was trending sideways into the band, and like in short order, it popped, it started hitting weekly 3 ATRs, and I just started rolling it, taking profit off. End up letting it go a little prematurely. Again, this is when we were relatively new to the system, and it ended up going more the next week. So that's when it was like, hey, my mentor specifically told me, stay in uptrends as long as possible. If you don't believe that the uptrend will continue, just hedge it, and if you're wrong, take off the hedge. If you're right, you look like a genius. That kind of stuck with me. So if it pushes and it ended up pushing up way higher, we weren't privy to that per se, but seeing it made me a believer to just follow the system as intended. What would I do? What would I do necessarily for Nakor now? On the daily, as you can see, it's in this kind of rotational, this daily rotational level. So let's say, for example, that you have Nakor and it gives you a buy trigger. Well, you could probably take that buy trigger, and I'll keep that on. So if you notice, I put this trend line here as a. Let me see if I can pull it up here. Pull it up here for So it's like I could see that there's selling pressure, and if it was going to complete or was it going to break that selling pressure. It did end up breaking that relative selling pressure, and did not continue on that trend of selling pressure. So I think at one point we took a couple of day trades on the core, pursuant to our other trading system, and it actually worked out pretty decent. Let me see if we can pull that up here. Or Novo, sorry, I keep saying the core. It's Novo. Yeah. So we took one trade on Novo that didn't work out, and then the second one actually ran to about 2-1. So we did actually take that, and we let it off in time when it hit that 2-1 target. So it worked out really, really good. I think next time selling for premium on the day was pretty good. But who knows? Like, as you can see here, like, for the relative volume as it bought, there was a lot of selling, and then when they got off sides, right here, these three candles, when they got off sides here, it bounced around, it tested that area where those sellers were, and then it took off. Right, buyers were definitely in control at that point. So, seeing the levels where the sellers are and where they're once they get off sides, that can tell you, hey, there might be, although it be very short, a potential for unbalance to rip as they let go of their positions to the upside. So it's just something to think about. It did kind of dip in there a little bit, but it didn't really pay them. So they let go. They let go of those positions as soon as they were like, "Yep, this is the best time to get rid of them. If it's not going to pay us out." Same thing here. Like when you see going into the close, there's buyers. There's your trigger to buy, and it kind of rips in these guys' faces. So once it gets off, when it gets some offsides, it just rips. Boom. It's pretty quick. Not something that we could take a hold of because we don't have those tools yet. So Shopify. So right out the gate, right, 10-minute golden cross. We're looking for. We put an alert to see if it's gonna break that level. It didn't. So it's still there. We're trying to see will it. Oh, you can't see that. I'm sorry. Out the gate on this side, Shopify had a golden cross here on Friday. I put an alert here to see if it actually would break. And why did I put that alert here? Because as it continues to roll to the downside. Where's the weekly at? Weekly, thank you. Right, I'm looking to see if it will break to the downside and give me a nice juicy entry here. Right, it would have been nice to get in here and maybe get the break. Maybe you get 3 weeks of juicy action, maybe for selling off these levels, not necessarily buying contracts, because I don't know if it's going to move or not. But you definitely get an opportunity to sell after 3 weeks of it going sideways. It kind of makes a very juicy range. I'll kind of draw that out here for you guys. Once somebody gets off sides, right, that could be a potential for you to get in the trade, and capitalize on them getting off sides temporarily. So we'll make this yellow, and we'll make this one yellow. Right? It's just so hey, these guys are off sides, and if it really goes, it's gonna go against them pretty heavy. Kind of like right here, you think it would rotate and just complete the rotation. It doesn't. It breaks and really rips against everybody that's on this side. They don't want to be off sides, and once it breaks, it really rips. It really cranks down hard. So same thing here, chops for 3 weeks, breaks that rotational zone, right, and then really rips the third week. So if it pulls back here, awesome. We could potentially come and get some premium selling going on. Tesla. So the Tesla trade that we had did actually expire. Worthless. It's unfortunate, but we didn't end up rolling it into the next week because the trend actually never did go green. Right, unbalanced volume went green, but the trend wasn't necessarily green, and it was just kind of chopping back and forth. So the following week it went up, and there was actually an opportunity to let it go. It was in, I think, like $1, not even like 10 cents of where we wanted to actually roll it or take something off. Decision time. And it barely missed it. It barely wicked us there. So it happens sometimes. It's just you don't have a crystal ball to know to move your take profit down 10 cents. Literally. So we went over in a video. Amazon is something that we were considering putting in our auto trend system. It's kind of in this choppy range. Again, a lot of the market's choppy. Nobody wants to be that guy that buys highs. If you look on the daily chart, yeah, it's test here, test, break, bounce, real chop. A lot of traders can get kind of messed up in these choppy environments, and all you do is, instead of waiting for these rocketing moves that continue for like 2-3 weeks, this is where you got to be flexible and hammer down into some of the smaller time frames. And really, let's say like the highest time frame you take is a 10 minute. You're looking for death cross, rotational breaks, boom, with volume. If it's not a defined, and maybe even a golden cross, bounce into this zone, and if it comes out, you take the trade to pivot highs. If not, you're not looking to take that. Same thing here, break, retest into the zone, take the sell if it breaks out, and then look for it to approach the lows. Here it does, like the next day, but I mean, a lot of chop there, man, I'm telling you. So on days like that, you have something like here, you have this zone, it breaks below it, cool, I'm going to just take a trade to pivot low, call it a day. This zone kind of sets up down here. Okay, if it breaks, I'll take it to the mean, call it a day. Don't look for too much. Just narrow down in the smaller time frames. It comes down here as it starts to break out, take it to pivot highs, I'm done for the day. That's your trade. And that will help you to develop like an easier, like especially in chop, narrowing down to the smaller time frames, getting your intraday levels so you know, hey, where this might react to is going to be very, very important. Like it's reacting off this weekly pretty heavy, comes up, fails off of it, comes up again, fails off of it, comes up again, starts building market orders at the top of it, ends up breaking. You know, those levels are going to be key because it's reacting like a lot. This is on a 10-minute chart, but the white line is a weekly level, and you're seeing how it's reacting off of that level, constantly getting rejected. So it's important. If you don't have your at least your higher time frame levels mapped out, you could get diced up, and that's that. I love Amazon, but it's been kind of chopping around. So I wanted something that's going to be trending in our direction. Now it could break that. And what we were looking for, maybe if you see a test up high, you could potentially take a credit spread to the downside or something like that. But we're basically looking for the top of ranges, looking for in a trending market, looking for that thrust to the downside. Kind of hit SPY pretty heavy. Microsoft, my baby. We love Microsoft. So Microsoft is a gift that literally keeps on giving. It's been a pretty sustained uptrend for a while. And it's not even in 3 ATR territory. It's like not even close. So it's in a very strong uptrend. Even when it came down into a weak uptrend, it pretty much sustained that for a good 2 months. So if you bought calls in Microsoft, I would definitely say hold them, and I wouldn't consider getting out of the uptrend until it hits 3 ATR. And even then, like we said, hedge, and if it breaks high, let it go, right? You look like a genius if it goes down, but if it doesn't, then you have your uptrend play. So this is you guys. Thank you guys for joining us. This is your boy MC Fire. We really appreciate you coming with us on the weeklies. If you guys have any questions about anything that we've been shown, whether it's the indicators, the systems, if you want to see more complicated systems, don't necessarily expect me to change the entire system for you. But if you have a specific question about the system we have, it's very simple, especially for the swing trading. And if you have some suggestions on our intraday trading as we try to get funded, please let us know. We would love to hear from you guys. Again, as always, we'll see you again. Have a good day and goodbye.